make double the amount of money. So you should be really happy to see these sell-offs over time. The world's most famous hedge fund managers who use that strategy that really made wealth. So if anybody tells you they know what's going on or where it's going, they're lying. We don't. It's all new. It's the fastest adoption of any technology in all human history. So the internet was previously the fastest adoption of any technology. This is growing at twice the speed. So currently there's 300 million users of crypto worldwide. It's growing at 185% a year. So that means by next year, you're at 700 million people. And then the year after that, you're at 1.5 billion people. So what's amazing about it is, yes, it's amazing the technology and Web3 and all of the power it gives back to the individuals and all of the great stuff. But the big difference here is by owning the tokens, you're being part of the network as well. So you can not only get the benefits of this new system in a social sense, but you get it in an economic sense too, because it goes up in value. It's like finding Facebook back in 2010 and being given shares in Facebook that everybody who used Facebook had shares. It would have made everybody rich. This is what this is doing, because you get the utility of all of this and you get the financial benefit. But then there's a bigger thing. So right now we're seeing high inflation. We're seeing inflation at 8%. So then you're really behind the game unless your salary goes up enough and you can start saving more. So everyone's behind the game. But then there's another crazy thing happened when interest rates hit zero and we got to 2008, that famous financial crisis. The central banks started using something like the Federal Reserve, being the central bank of the United States, started using a different way of trying to stimulate economic growth and save the banking system. And that was called quantitative easing, which is a fancy word to say we're going to print more money. And when you print more money, you devalue the money. So to put it in layman's terms, if you are really thirsty and somebody says, well, I've got a bottle of water, I'll sell it to you for $5, you'll pay $5. If somebody gives you 1 million bottles, it's worth nothing to you. In fact, you pay somebody to get rid of it because it's cluttered up your entire house. So things that are, if there's too much of something, it becomes valueless or less valuable. So 1 Mona Lisa is valuable, 1 million Mona Lisas, not valuable. And that's what's going on with money. They're debasing it, which means that they are lowering the value. Now, you don't see it very easily. All you see is that these asset prices keep going up. Every time they do this quantitative easing magic, the price of the stock market goes up, and the price of housing goes up, and the price of crypto goes up. And everyone's like, well, I can buy less of it now suddenly, but my income hasn't gone up. That's debasement. So you're now poorer, and you didn't realize how it happened, and you don't understand it. And it makes people angry, because they don't understand why they can't get ahead. Most people in financial markets are just smart people who love, generally who love to look at the world and look and assess change and opportunities. And most of them start to see this as a change and an opportunity. I mean, most people aren't going around saying, well, we need to stop this. These guys are coming after our jobs. They're like, oh shit, this is happening. I need to get into this because if not, I'm not going to have a job, but this is amazing. There are more senior people in the industry at the very top who don't like it because it's their business that's being threatened. But every day I see that changing. Every day, I recently gave a talk and Jamie Dimon was in the front row, who's the head of JP Morgan and was a very anti-Bitcoin person. He was taking notes at the front, leaning forward, taking notes. So the world is changing and people are changing and people are understanding. So we're seeing the investment banks like Goldman Sachs and JP Morgan adopting this. People are saying it's inevitable. So there are some people that I've seen who are really skilled at buying and selling stuff short term. It is really bloody hard. Hardly know anybody at all of the world's most famous hedge fund managers who use that strategy really made wealth. There are some. The real wealth is made by spotting something that is got a long-term secular trend ahead of it and investing in that, and then not doing anything but just keep investing in that one theme. So in this case, let's say it's Bitcoin and Ethereum. We've talked about the role they both will play. So in 10 years' time, the probability of these being a magnitude higher in price is huge. So what you want to do then is it changes your mindset. You say, well, every time it sells off like it did, over the last year, it's been down 50%. Well, I should be buying it because my expected future return has just gone up. Because let's say something's at 100 and you expect it to go to 500. So that goes up 5 times. If it's fallen to 50 and it's going to go to 500, it's now going to go up 10 times. You make double the amount of money. So you should be really happy to see these sell-offs over time because it means you can buy more cheap stuff and gives you a higher return for the future. And that's why dollar cost averaging takes the stress of trading away. It just says every month or every week or every quarter, I'm going to stick some money in, and I don't care where the price is, and I might rush my buys if I think it's really fallen, or add a bit extra because it's a good opportunity. But you just look at the long-term trend, and the way to look at these things, because if you look at the long-term trend on any normal chart, you go to TradingView or something, they all look like this. So it's not easy to look at. Use what's called a logarithmic trend, where it changes the scale, and then you can see these beautiful long trends emerge. And Bitcoin fit perfectly. Amazon was the same. Google was the same. They're all the same. You just find this, and then when it starts getting down to the bottom of that trend, it's a really interesting place, unless something has fundamentally changed and that particular token is not as robust, or it may be failing because of the community or the utility that it's offering. But with ETH and Bitcoin, it's pretty straightforward. And then it takes all the stress away, because what you're saying is, I don't want to access my money for 10 years, as opposed to, well, I'm going to buy and sell this, and I'm going to buy a watch, and I'm going to buy a holiday with this, and before you know it, you take too much risk because you can't afford your holiday, and then you have another bet, and then you've lost money, and it's a bloody shit show. What you should do is say, listen, I want to be able to afford a great house in 10 years' time, so my route to this is by investing in these cryptocurrencies, and I'll just do it over time, and I won't even look at how much my money goes up and down. And that's what I do. I just don't look at my P&L, my profit and loss. I just think, can I put more money in? And because I'm just thinking it's a long-term trade, it doesn't matter. It's like, we don't look at our house price every day and like, has it gone up? Has it gone down? What did my neighbor sell for? It's like, that's stupid. Because you're in their house for 5 years, 10 years. And so you think, okay, well, over time, hopefully it does okay. Yeah, and you need to step back from being sucked in to the extremes of the community. Mm-hmm. So if everyone's really bearish and they all hate each other and they're all picking on each other, and the Bitcoin guys are picking on the ETH guys who are picking on the Solana guy, you know that it's probably somewhere near the low, because everybody's losing their shit. Mm-hmm. And if everybody's like having laser eyes and saying it's going to the moon, you probably want to hold off on your dollar cost averaging for a bit, because people are, over enthusiastic.